yesterday there was a lot of enthusiasm and nearly, frankly, as much skepticism over the president's new trade ceasefire with China. Now, we know he put the next round of tariffs on hold. We know he's restarting negotiations with the Chinese. But after reviewing what Trump actually agreed to do, the biggest thing by far is the rollback of sanctions on Huawei. When the president blacklisted this $100 billion in sales Chinese telco equipment maker last month, it was truly a major escalation in the trade war. Kind of shocked me, frankly. It crushed all the stocks of the companies that do business with Huawei here. And there's a lot of semiconductor companies that do business. However, before you start buying Huawei suppliers hand over fist, you need to be careful because we still don't have much detail about what happened. And I expect some of these suppliers will benefit a lot more than others and some not benefit at all. So who wins from the trade detente and who might not when it comes to Huawei? Okay, here's how I look at it. When the blacklist was rolled out, it initially hit all of Huawei suppliers. Now that it's being rolled back, I only expect a partial rollback. If you make plain vanilla tech that's used for handsets, just for your phone, okay, just for this, all right, I'm betting you're good to go. But if you're making the components for telco infrastructure, I think you got a pretty big problem. Our government desperately wants Nokia, Ericsson, and to a lesser extent, Samsung to catch up to Huawei when it comes to 5G. And they're so far behind. Look, I'd like to just say good luck, but I think Samsung's making a comeback. Ericsson, Nokia, not that fast. But the best way to do this, the best way to make sure that they're in the lead would be to put Huawei out of business because they're so far ahead of everybody else. They make better and less expensive equipment. But there's only so far that you can push these things. After Huawei sanctions, the White House was clearly worried that Apple was about to be targeted, blacklisted by the Chinese government. I don't know if that's why the hardliners lost this one, but whatever the reason, the more pro-trade forces in the administration triumphed. Now, it doesn't mean the hardliners go away. Which is why I have to view this as a limited victory. Under these conditions, I think you need to be selective. I'm betting the rollback of the sanctions will benefit. Probably going to write these down because there's a lot of them that were said that were benefiting. They're wrong. The winners: Skyworks, Micron, Texas Instruments, and Qorvo. Now, I am not sure about Broadcom or Xilinx, and I'm skeptical, particularly about the last one, which was down a lot today. The issue here is simple. The more proprietary your chips are, the less likely you'll be allowed to sell them to Huawei. Think of it as commodity versus proprietary. If your company makes components for cell phones, you're probably good. If you make chips for military communications, you're off the table. If you make wireless infrastructure technology, I think it depends, because they really don't want to let Huawei run away with 5G. In short, the Trump administration is willing to stop trying to destroy Huawei. I mean, that's a real blow to the hardliners. Remember, the hardliners mean people who are cold warriors. But they're still keeping this serial bad actor on, this is their term, short leash. Speaking of hardliners, this morning we spoke to Pete Navarro. Now, Peter is the president's top trade advisor on Squawk on the Street. I wish I had been there. It was in the 10 o'clock hour. I was not able to play. But he told us that they're, in a great interview, that they're only permitting the sale of lower tech items to Huawei that won't impact national security. Listen to what he told Faber.
Selling chips to Huawei, a small amount of chips, less than $1 billion worth of chips a year in the short run, is small in the scheme of things. 5G, the fight for 5G, President Trump is very committed to having the U.S. take the lead on 5G, building companies like Nokia and Ericsson up in Europe will contribute to that process. So 5G is huge. Selling a few chips to Huawei is not.
In other words, this trade truce is great news for the more commoditized semiconductor companies, but it will have less of an impact on high-tech proprietary semis. So let's go over what I think are the potential winners so you have it more in depth and not just like, grasping. When you look at the companies that do the most business with Huawei, Micron, Xilinx, Skyworks, Qorvo, Inphi, and Lumentum, they all get more than 10% of their sales from the company. Okay, so that's the broad list. Lumentum and Inphi, they're at the top of the list. But the former is a telco infrastructure play, possibly too proprietary, and the latter has an inconsistent trade record. I'm not going to recommend that here. As for the others, Qorvo, QRVO, makes radio frequency chips for both wireless and broadband communications. This is a company that already gets more than half of its sales from China. In early May, Qorvo reported a blowout quarter powered by its booming 5G business, but nobody seemed to care. Later that month, after the Huawei blacklist, the company had to slash its forecast for the quarter by $50 million. and that's a lot for this company. So is it a winner now? Do we just tack on that to Corvo and start buying it? Not so fast. I'd say it's only a partial win. The handset side of the business should be safer. But you know what? I've got doubts about the telco infrastructure side. And that's all about 5G. Not with the White House signaling that they still want to check Huawei's dominance there. I mean, you heard Navarro. I think he's not giving you a green light. I expect Corvo to do better, but it wouldn't be my number one pick here. It's sort of a microcosm for the broader group. How about Skyworks? SWKS, which makes radio frequency chips for all sorts of connected devices, especially phones. Yep, Skyworks is a winner here. While they also have infrastructure business, their biggest customers on the side are Nokia and Ericsson, not Huawei. You heard what Navarro said? That's who we're trying to get to win. While its smartphone business is much more levered to China. I think it works, especially since the Chinese haven't retaliated against their top handset customer, Apple. Skyworks has a very strong management team. It is an extremely cheap stock that has just gotten beaten up here. Risk reward, good. Then there's Xilinx, XLNX. Now that's to make a programmable systems on a chip, certainly proprietary, not commodity at all. Huge exposure to 5G, 27% of its sales from China. Yesterday, the stock surged higher on the trade truce, but today it gave up nearly all of those gains and then some because the Trump administration doesn't seem okay with selling this kind of technology to Huawei. As much as I like them, I got to tell you, no thanks. On the other end of the spectrum, you've got the commodity plays like Micron and Western Digital. Micron makes DRAMs and flash memory chips. Western Digital makes hard drives and flash. Now, there's nothing sensitive about this stuff at all. Nothing proprietary. While both stocks got hit today, they're going to be big beneficiaries now that Huawei can buy commodity semiconductors from American companies again. But, and this is the big but here, it's tough to recommend these stocks here. They've already had a tremendous recovery just last week. Micron reported better than feared quarter and indicated that they'd made adjustments to offset 90% of the China tariffs. At the end of the day, you should only buy Micron or Western Digital if you believe the flash business is bottoming really hard. When I go over the Micron call, I mean, they're talking about a bottoming year over year. That is probably too far for most of you. All right, so what about the telco equipment companies? And here we're thinking about Acacia, Ciena, Infera, Finisar, Lumentum. After listening to Peter Navarro this morning, I got to avoid them all. I'm not kidding. They're all in the penalty box after what he said on Squawk on the Street. If the White House wants to slow Huawei's quest for 5G domination, this kind of stuff is exactly the kind of stuff they're not going to let Huawei buy. Let me give you one more that pulled back today severely that I thought was unwarranted, and that's the stock, not the dog, Nvidia. Now, Nvidia doesn't care about selling chips to Huawei. They're about gaming, data center, artificial intelligence, machine learning, autonomous driving. However, this company is trying to buy Mellanox to cement its position in the data center. And the Chinese regulators have been holding up the deal. Remember last year when China blocked Qualcomm's acquisition of NXP Semi? Both stocks got clobbered. We don't want to see the same thing play out with Nvidia. And with the president dialing back the trade tensions, maybe in response to Apple, I think there's a much better chance the Chinese authorities will greenlight the Mellanox deal. No guarantees, but it sure makes Nvidia attractive here. What an easy way for China to show that it's willing to play ball. And what a great opportunity given the fact that the stock was completely annihilated today. The bottom line, I don't want to downplay the importance of what was agreed to this weekend. But the president isn't rolling back the whole Huawei blacklist, just part of it. That's why I think Skyworks Solutions is the biggest winner here. And many companies that do business with Huawei, like the telco component suppliers, the ones that jumped, they may not be winners at all. Stick with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.